Well, thanks everybody for coming out. As you can see, today's seminar is on Real Estate Investment 101, Basics of Real Estate Investing. Today I'm just going to cover some of the basic ideas of why people invest in real estate and why I feel everybody at some level should be involved in it. I think real estate investment provides a lot of opportunities that few people actually tap into, and that's what I wanted to discuss today. As you can see, what to consider, what to avoid. There's a lot of things in real estate investment that we can call pitfalls that will actually cause you to lose lots of money. And that's what I think scares most people about real estate investing, is the many things that can go wrong. But if you do it correctly, there's no reason why you can't actually become wealthy like most individuals that are millionaires in the United States today. So we'll just get into this thing. First of all, why is real estate a good idea? Here are some of the main benefits. First of all, it's passive income. How many people here have checks coming to their doorstep when they don't go to work? Is there anyone? Okay. It's kind of, so that's a form of passive income, business. And that's exactly what real estate is it's a business. It's something that we do to create wealth, something that we do to create passive income. Another thing is low barrier to entry. It doesn't require a lot to get involved in real estate investing. A lot of people think it does, but it really does not. And fortunately, with the limited amount of time, I'm not going to go too involved with some of the options that you'll have with that low barrier to entry. But that's something that we can discuss at the end with some questions. Another good reason is the higher returns. I don't know of anything else outside of real estate and sometimes the stock market, and sometimes commodities that will give you the returns that real estate has. Lastly, tax benefits. I mean, that alone is enough reason why most of us should be owning at least one or two pieces of property, if not more. Just the tax benefits alone will turn a lot of the common day expenses that you currently have into tax write-offs by creating a real estate company. Next, the game Monopoly. How many here have played the game Monopoly before? Everybody. Anybody know the history of Monopoly?
No.
Well, it's on the board. I mean, you see all these names are things from the New England area. We have the Boston area. We have Park Place and Boardwalk, and all these famous places from that area. But what is the goal of the game? What is the purpose of the game of Monopoly?
To have a monopoly.
Okay.
To make money.
Make money. Okay. Any other answers?
To own the board.
To own the board, yeah.
Take
So
everybody else.
essentially, yes, you're trying to remove everybody else from play by essentially creating a real estate monopoly. And how is it done? Well, the reason I like this game so much is because it really teaches you investment basics. You're buying first land, and then you're building houses to improve it. Then eventually you're going to hotels, and that's something I brought tonight that I think you might enjoy. Is I'm going to give everybody one of these pieces from a Monopoly board that I just bought. I've got hotels and greenhouses, which are the basic elements of the game, and this is how we're going to do it. If you own a piece of real estate right now, raise your hand. Okay. And then, well, let me clarify, a piece of investment real estate. Okay, so there's a couple. And if you just own a home, I'm going to give you a greenhouse. So, greenhouse for you. Hotels for these gentlemen. Okay. And I want you to hang on to this, put it somewhere where we're going to see it every day. Because it comes back to what we're discussing tonight. The greenhouses are symbolic of, basic investments. Your personal residence, duplexes, fourplexes, that kind of thing. The hotels get into bigger investments, commercial, and that's why I decided which piece to give who. If you got a red hotel, that should be your next goal, is to get some of the bigger deals, build some more passive income. You've already got your feet wet, the market a little bit, maybe time to take it to the next level. If you haven't gotten a red hotel and you have a greenhouse, the reason for that is because you're new, you're getting started, and you should start with some of the smaller deals and really work your way into it, and we'll get into it more. But play this game. It's a great game. I'm actually currently in development on a game that will hopefully be a little bit better. But it's as simple as buying small deals, the greenhouses, working your way up to the red deals, to the hotels, and those are the types of things that will provide passive income long term. Next slide here. What to consider? Well, we've already mentioned everyone can invest, but taking it to the next level, what is your end goal? Why are you investing in real estate? Has anybody ever asked that question before?
Make money.
What is it that you're trying to do? Make money? That's a good reason, but it's not really enough of a reason to drive you to the next level, to actually get you interested in actually investing in real estate. Okay. The truth of the matter is if the only reason you want to own real estate is to make money, you're probably never going to do it. I see so many people that are just on the fence all the time, say, well, I want to own property, but I just don't know the next step. And really the next step is just going out and buying something, even if it's just a house to rent. You can get a house in Utah for as low as 50 grand and make money. I mean that's not a lot of money. You can get into a house for as little as $5,000 at that point. I mean that's a pretty low barrier to entry. Granted, it is $5,000. That can be a significant investment for some people, but there's other options. Even if it's just buying a home like we did. Me and my wife, when we first started, we got married in 2002. We decided to buy a home, but I wanted to do it a little bit different, so we bought a duplex. Okay, bought a duplex. We lived in half, rented the basement to a few different couples rather, for a while. We had some interesting experiences. We had one tenant that seemed like the perfect couple, and when they moved out, they had trashed it worse than any other tenant ever trashed it.
They had a lab.
They had a lab that basically destroyed the walls, and anyway, so there's some significant deterrents for people in real estate, but in the long run, it's a significantly great benefit. So ask yourselves, what are you in for? The short term, the long term. Most people, when they think of real estate investment, they start thinking, oh, I want to flip houses. And why is that? Well, that's the quickest way to get cash from real estate investing is flipping houses, but it's also the one I recommend the least because it's the greatest risk, has the most pitfalls. It ruins more real estate investors than I've seen succeed with it. For every guy that I see succeeding in flipping houses, there's probably 10 other guys that have tried it and lost their shorts. Okay, so it's not a good way to build substantial long-term passive income. That's why, for me, I'm in it long-term. I'm not here, I admittedly will flip a house here and there if it's a no-brainer, what I call it. There's just so much equity that it's almost like I can't lose. And then I have a plan B to rent it and use it as a rental property, and it'll work either way. So either way, I'm not going to be too far off from my goal. Okay, but that's the only time I'd ever recommend anybody flip a house is if they have a plan B and even a plan C for it if they're not able to sell it quickly. And that's what ruins most people. Now the long term is really the investment properties that will bring you passive income. Your rental houses, your rental apartment buildings, whatever it is, whether you want to get into retail, commercial, or apartment complexes, whatever it is, that's where I recommend people should be. Okay, because it's someone else making your payments, it's someone else making you rich essentially. You're providing a service to the community as well, and all the other benefits that we've talked about. Now, what do you get in return? We hear this term a lot. It's called return on investment or ROI. It's essentially what you're getting in return for your dollar. And average real estate ROIs in the state of Utah would be between 10 and 30% right now. And I don't know anywhere else where you can go to a bank, the stock market, except maybe cryptocurrency, which is highly volatile, where you can get anything near that type of rate of return on a sustained level. I mean, real estate is really where it's at when it comes to that. And then lastly, what is your risk quotient? Well, what does that mean? Anybody ever heard the term risk quotient before? Okay. For those who haven't, it's essentially the level of risk that you're willing to take on. Most people they have a zero risk tolerance. difference. You know, they go to their 9-to-5 job, they come home, they watch TV, they eat dinner, they go to bed, rinse and repeat, and that's fine. Some people that's plenty for them. Just think if that same person instead spent an extra hour a day looking at a few properties, making a few offers, you know, 5 to 10 hours a week, doing those things. You know, we'll get into that a little bit more detailed, but even if you picked up one property every 5 years, by the time you're retired, you should have about $5,000 to $8,000 in passive income from those properties. It's pretty significant. I mean, that's just one every 4 to 5 years in a 30-year career. You know, you're ending up with 5 or 6 properties, hopefully paid off by the time you retire, and that's a significant retirement, even if you're doing that little. Okay, so definitely some things to consider. Well, what are some strategies? I've already talked about some of these a little bit. Rental property, again, my by far my favorite type of real estate investment. As I mentioned before, I own several duplexes. I've owned rental homes. I'm working on real estate rental projects for senior housing. By far the best way to do it. Lease options, you know, that's a good way to do it. It's kind of both it's like you have 1 foot in flipping houses and 1 foot in rental property. You know, you're buying houses, you're fixing them up, you're leasing them out. Half the time people will buy them, half the time they won't. And you know, it's a good way to do it where your tax implications aren't as bad. Short sales, foreclosure, REOs. To me, that's the biggest myth in the real estate industry are those things. People think that because it's an REO, foreclosure, or short sale, that it must be a good deal. Well, honestly, most REOs and distressed property like that, if it's already listed and a short sale is being negotiated, it's going to take months to years to negotiate, and by the time the bank comes back, most of the time you're getting a fair deal, not a great deal.
What is an REO?
An REO stands for real estate owned. It's a bank-owned property that's been foreclosed on. So, and then lastly, applying some of these to your own home. Kind of delve into my background a little bit. I've been real estate investing for about 10 years now. For 4 of those years, I was a real estate coach for Robert Kiyosaki in the Rich Dad Real Estate Program. And for those who don't know who that is, he wrote a famous book called Rich Dad Poor Dad. It's been on the national bestseller for years, since the late 90s. And one of the things that Robert Kiyosaki is foremost and famous for saying is that your own home is not a real estate investment, it's what he calls a liability. And I tend to agree for the most part on that, but there's a few things that I don't agree about it. First, I think everyone should own their own home, because if you're not, you're paying someone else to build their wealth. And at least owning your own home, you're building equity, there's still some write-offs involved, and there's some things there. So, you know, there's certainly some things you can apply to buying your own home. Anytime I buy a home, I look at a few things. The cost I'm paying per square foot, okay? To me, that's the #1 indicator of if I'm getting a good deal or not, okay? So if you know someone who's buying their own home, teach them some of these things. Have them look at the cost per square foot. Have them look at what the rental rates are in that area, because most of the time they're gonna keep it and rent it. That's one of the best ways to buy rental properties: buying a home to live in, moving, renting the home that you formerly lived in. So, you know, that's the #1 strategy here from real estate investors is you make your money when you buy, right? You've heard that before. I'm sure most people have. And that's true. So when you're looking at a home to buy, consider what it would be as a rental as well. So when you move on, you know, you can have that as a rental long term. Secondly, about your own home, the tax benefits of it. I'm not an accountant, so you'll want to consult your accountant before you take my word for these things, but some of the things that I've been advised from my accountant is, you know, you can write off any interest that you pay on your mortgage, some of the expenses that you accrue for home office or some of these things can be written off. And the best part about it is if you've lived there for 2 of the last 5 years, when you sell that home, you can exempt most of the capital gains. It's $250,000 for an individual and up to $500,000 for a couple. So what that means is that when you sell your home, you're able to keep it up to 3 more years, or when you move out, you can keep it up to 3 more years and then sell it and recoup all those costs and not have to pay any capital gains up to $500,000 per couple.
What's a capital gain?
Capital gains is the taxes that you pay to the government for any money you made on a real estate purchase or sale. So
What were you saying? You don't have to pay capital gains?
not if you've lived in the home 2 of the last 5 years. So, all right, moving along.
It has got to be your principal residence, correct?
Correct. It has to be your principal residence. It can't be a rental home that you live in or a vacation home. It has to be your principal residence. But as long as it was your principal residence 2 out of the last 5 years, that's the kicker. That first duplex I mentioned that we bought, we lived there for about 3 years, kept it an additional 3 years, and then sold it and took all that profit and rolled it into other investments and didn't have to pay any capital gains. So risk and what to avoid. Well, spec homes. Anybody here know what the term spec home means? Speculation house.
No.
It's essentially where you buy a lot, build a house, and you try to sell it. Okay. A lot of people do this when the market's going up because they think they'll make good money, and oftentimes they do. You know, I see a lot of investors that they'll buy a lot, they'll build this nice big house, you know, they'll sit on it for a couple of years and then they'll have to let it go back to the bank because they didn't time the market right, or something's wrong with the house, or you know, someone doesn't like the color of the carpet, whatever. You know, that's why big builders do well, is because they know and they time things properly and they buy in bulk. Don't get into spec housing unless you know what you're doing. I mean, if you know what you're doing, you can do okay, but for the most part, it's not going to build wealth for you. Capital gain strategies, well, has to do more with what we mentioned with the flipping of properties. Negative cash flow, where I'll see a lot of people, they'll buy these houses to flip, they'll get stuck with them, they'll rent them out, and they're losing money every month. Well, it doesn't make sense on any level. Okay. Secondly, the negative rates of return that you get. You know, if going back to what we said about Robert Kiyosaki, an asset versus liability, he talks about an asset being something that makes you money, a liability being something that takes money out of your pocket. Well, we're here to make money. Okay. Real estate investors should be making money, and that's why they should call themselves investors. Otherwise, they're just bad businessmen. It's really what it boils down to. You know, I've seen so many people call themselves investors, and then 5 years later, they're broke because they have no clue what they're doing. So definitely become educated. Hard money versus venture capital. Okay, hard money is a source of funding for these types of deals that, you know, you can go in, they don't check your credit score, they don't look at your work history, they don't ask for these types of things, but they'll loan on a property based on the value of the property. And that's why these types of strategies are viable to some people that are getting into the real estate industry, is because they don't have to do anything really to get the money. But it's a higher interest rate typically. They charge a lot of fees when you get involved with that, and it turns out to be a nightmare for most people. So just be very wary of staying away from those types of things if you can. If you know what you're doing, you know, great. I advise people though, in the long term, you're not going to make money out of real estate flipping. You're going to make your money by buying passive income properties. Great example, I talked to a gentleman who's a pretty prominent mortgage broker here in the state of Utah. He's developed quite a few larger, higher profile real estate developments in and around the state, mostly in Utah County. He told me the other day when I was talking to him, he's like, I made more money just doing my mortgage business than I ever did developing property. In fact, he's had to declare bankruptcy, and more people that I've talked to that have done this have declared bankruptcy because they have done these types of strategies. And the people that I talk to that make money in real estate are the people that own apartment complexes or develop retail centers for rent, these kinds of things. I mean, I can't say it enough, stay away from flipping property and these types of strategies if you can avoid it. So how do we get started? Well, I'm probably not saying anything that hasn't been said 100 times, okay? But the reason for that is because it works, okay? These are tried and true methods to getting involved with real estate investing. Build a team and set goals. Two things that are vastly important when starting out or even continuing in the real estate industry. I probably should have put setting goals first, but building a team and setting goals go hand in hand. You need to know what your goals are. You know, where do you want to be? Why are you doing this? Is it for retirement income? You want to spend more time with your family? You don't want to have to work 12 hours a day to provide an income. You know, these are the reasons why successful investors are successful. And they build a team. They have people in place that help them accomplish their goals. You know, they find people to work with, like a mentor. They find good real estate brokers and agents, bird dogs, wholesalers. They work with private money or mortgage professionals and banks. They have handymen and contractors that they can go to when they have problems with their property. Title companies, can't say enough about title companies. Brandon can attest to this. I was working with a gentleman. He bought a fourplex. It was a smooth transaction, thought everything went well. 4 years later, I get a call. Geoff, that fourplex you sold me. Well, it wasn't even on the right lot. In fact, the fourplex I own is only on half a lot that I own, so I technically only have half a fourplex. And I'm like, wow, what happened? Well, what had happened was the title company didn't do their job, okay? So when they went to do the title work, they said, okay, yeah, this title's free and clear. Let's go ahead and pass it off. Well, what really happened is a gentleman had built 3 fourplexes on 4 lots, okay? And when he did that, they were all one lot, okay, all one piece of property. Well, he went to the county and he drew up a map, subdivided it, 4 lots, so 1 fourplex set on 2 lots and the end 2 fourplexes on each of their own lots. Well, when me and my client drove up the day that we were looking at it, we were told to go to this one, you know, this address on this lot, this piece of property is what you're buying. Well, essentially, they lied to us, okay? So what happened was we went and thought we were buying a fourplex on this address when the addresses were actually transposed. So the address we were actually buying was half of a fourplex on a half of a lot, and it cost me a lot of money in a lawsuit, and it wasn't a lot of fun. So make sure you have the right title company. It's essential. So lastly, lawyers, accountants, financial planners. Brandon's on my team. He's a great lawyer. Recommend him to anybody who I
So
work
isn't
with.
the title company usually responsible for that? That's the whole reason you have title
They are,
insurance.
and they paid for a lot of it.
Yeah.
But
And you got stuck as part of
I
it.
still got stuck with part of it.
Wow.
So, yep. But the title company I work with now, they check everything. They check the boundary lines on the property, make sure the addresses match up, all of those
Who's
things.
your title company?
Magellan Title, Louis Hamner's the agent, or Nudia Bishop is also a title agent there. They're both really good.
Okay.
So if you're interested after the presentation, I can give you their information. And again, I was saying lawyers, Brandon's my lawyer. I work out with him several times a week. Great guy, knows his stuff. He worked for a company that helped Nouveau Riche for years. He's been in and out of the business for a long time of real estate investment, trusts and things. So, you know, can't recommend him higher. Accountants, I've worked with several accountants. As my business grows, I tend to change accountants, get a new perspective on what's going on. It allows me to try some new strategies and do some things different. Financial planners, you know, as you grow, this will become more prevalent. Insurances, things of that nature, good securities against your real estate. So a good place to put some of the returns that you're getting. Can't say enough, build a team, set goals, really important. Okay, that's pretty much the basics. Again, this is a 101 course. I'm not going to delve into a lot of details on things in this seminar, but I want to give an opportunity for people to ask questions, make sure that we're covering everything that you want to know for real estate basics.